Welcome, everybody, to the Chinchilla Pickin' Podcast. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. It is January 26th, 2022. We are still in January, and I am still David Underwood, and I am still here with Brandon Beaver. How you doing, Brandon?
I'm good. How about you?
I'm doing well. My allergies are really kicking in. I forgot to take my allergy medicine the past couple of days. So, that's what's really just kind of going on with me. Other than that, just enjoying the markets, planning spring vacations, summer vacations, that kind of thing, working that out with relatives and who not and what not. Fun, right?
Yeah. Good times.
Right. Yeah. Right now, I'm just kind of, I think in the next 2-3 weeks, I'm kind of in a standstill in my personal life. So kind of going through the motions, finding stuff to do daily, stay busy. You know what I mean?
Yeah. Well, I mean, I am super busy because I've started a new job. It's long hours, but I love it. So it's good. It's a good thing.
Is it long hours? Is it really?
It's for sure long hours. Yeah.
Gotcha.
It's at least 10 hours a day.
Wow, man.
Okay, you're being sarcastic. I can hear it come through.
No, I'm not, because yeah. All right, look, I'm not going to say how many hours I work on a day because I have people that I've worked with that listen. So, but 10 hours a day are long days, man. I'll give you that.
I can.
So,
yeah. But it's fun and the time goes by fast. So I'm fine.
There you go. What do you say we get into it then, man? What do you say we get into it? Yeah.
We're going to fight. No, I'm just kidding.
Yes, virtually in the metaverse. In the metaverse, you get to pick out your own avatar. All right, guys. Rules. Everybody knows rules. Brandon and I get together 5-10 minutes before the show, and sometimes we tell each other what we're going to talk about, and sometimes we don't. But you hear the live discussion either way here on the show. Today we did not say one word. We literally talked for 30 seconds, and now we started the show. This is Brandon and I live interaction for you guys. I get to go first this week. It's been a while since I get to go first. I'm going to enjoy this. So let me start with a call I made last time on the show. It was Saturday. And I was like, guys, look, Tesla. I said I would buy it at 943. It dipped down on Monday. That's actually when I bought it. I said I was going to buy it on Monday. I bought it on Monday, just like I said I would. It dipped down to it was in the 890s, 900 flat, somewhere around there. I got it around those price ranges. And then today, like I said, today, the earnings, it's going to have good earnings. So let me go over the earning numbers real quick for you in case you didn't know. Tesla had a top line number. That's a revenue number. It's 17.72 billion, expected 16.57 billion, a small win there. I got the EBITDA earnings, or the EB, the earnings, before inflation, taxes, debt, and all that. Yes. So EBITDA is just fun to say, but 4.09 billion EBITDA. All right, I'm going to stop. That's it. And versus an expected 3.896 billion. So, I mean, they beat top line, they beat bottom line, they beat on both of them. So why wasn't the stock moving as much as I thought it would, right?
1 second, just to go. So this is earnings before interest, taxes, depreciation, and amortization. So but basically before their expenses for those things come out. Okay, go ahead.
Yes. But it's after paying your employees and your overhead costs.
Yes.
So, and that's the biggest cost is employees, and then in this type of business, his type of business, raw materials would be the biggest cost.
Yeah.
All right. So
just kind of an estimate anyways.
Yeah. Right. So it didn't skyrocket, right? It didn't go up to 1,000, like I was thinking it was going to happen. So why didn't it go up to 1,000? And the big headline, everywhere you look, CNBC, you go to Bloomberg, you go to Fox Business, you go to whatever you go to for business news. It's going to talk about how Elon Musk said that there were some supply chain issues. And that was the headline everybody ran with. The supply chain, and he mentioned that wasn't headwind last year, and it's going to be a headwind still this year. However, They did say that they're expecting annual deliveries. If I could talk today, it'd be nice. Annual deliveries comfortably, quote unquote, to grow by 50% year over year, even with those supply chain issues maintaining through 2022. So they don't seem concerned at all by supply chain issues. They're still growing like they're a brand new tech company, which is over 30%. Most tech companies will grow over 30, brand new ones grow over 30%. They're still growing at that rate. They're still expected to grow at that rate. Are they overvalued at this moment? First, let me mention I did take my profit today. It jumped up to I didn't sell at the high. You can never time the high. I wish I could. It was I think it had like 980 for one moment in time today. But I did sell and take a good percentage. I took 5% gain on Tesla today. So I got my 5%. I got out. I held it for 2 days. It was a great trade for me. Is it overvalued? Long term, yes. I mean, we talked about that last time on the show. I think so, but is it overvalued if they continue growing 50% or more a year? Maybe not. But can they? Is my question. Can a car company grow at 50% more a year every year? Brandon, thoughts?
So at 50%, that does kind of justify at least a little bit the 300 PE that it has right now. You're going to have that continue. It's either going to have to be the 50% growth year over year, or the price of the stock is going to have to come down. It's like what we were talking about last week. The price to earnings ratio has to eventually come down on these growth stocks when we consider these stocks to be mature, right? And the way that happens is either the earnings rise or the stock drops. So right. In order to justify that, it's going to have to continue that 50%, growth every year. Otherwise, the stock's going to have to come down. Personally, I'm not buying Tesla because it's a high growth multiple stock that is at least still considered somewhat a tech company. And those are the kind of companies that get hit the hardest when we raise interest rates. Those are the kind of companies that have been getting hit the hardest lately because we're anticipating the interest rate hikes. So I'm not buying Tesla yet. I would think about dipping into it possibly in the 700s, and I would definitely buy if it was in the 600s or lower for sure.
I mean, I get you for an investment in long term. I mean, I made 5% off it in 2 days. So I'm not complaining, but yet here the problem with what I said, like it's kind of contrary, because I said I would buy it on Saturday at 9:43, but I couldn't buy till Monday morning, right? But by the time Monday morning came around, it had dropped, down to like 890, 900. So I kind of got it a little cheaper than what I was saying on the last podcast, and then it went up, and I got my 5% and sold. So. I mean, yeah, you could say I was right. You could say I was wrong. Yeah. You could kind of make a case for both.
I was disappointed with the after hours move because I expected the normal 5 to 10% jump or drop.
That's what I was looking for as well. I was looking for that as well.
And I thought we were going to get at least a temporary reprieve here and have it go higher in the after hours by about 5 to 10%, and maybe sell off sometime midday tomorrow or on Friday, but that's not what happened.
It's that headline. It's that headline, Brandon. You can't erase the headline. Supply chain issues. People hear that and they're just sell.
Yeah, people trade the headlines, and that's where if you're an investor, you come in and you read between the lines, because eventually the fundamentals kick in on stocks. And if people are overselling the headlines and they're not reading what they should be reading and seeing that things are actually going pretty well, then they can overreact to the downside. I didn't have an overreaction to the downside here. I was going to be happy either way, because if it jumped higher, we were going to have something to talk about. If it started more lower, then maybe eventually I could get a buying opportunity sooner. But
yeah, right. But it came out in the middle there. I mean, I don't know. But hey, I want to transition over to another company that was having supply chain issues. And the reason why I want to transition now is I want to talk about what this company is actually doing about a supply chain issue. So I'm going to talk about Intel. Now, I don't know if you're aware of the news recently, Brandon, but Intel had a good earnings here. So I'm looking at the screen here as I'm reading Intel's earnings. They had their client computing group was the big part that was down. That was down 7% year over year. But I mean, that kind of group you expect after the big jump up when it was the work from home. But they did have an overall beat on their earnings, which is great for Intel. They beat on the top, they beat on the bottom. They gave bad guidance, and it was a concern about the supply chain. So if you are also been watching the news here, I'm going to come back here to our video meeting. If you've been watching the news, Intel is doing something about the supply chain. They just signed a deal with the state of Ohio, and I believe it was $20 billion facility they're building in Ohio so they could build chips here in the United States. Is that, am I correct on that? Is that what you heard as well?
Yeah, that's what I heard.
So, I mean,
Yeah.
If they build the chips here in the United States, that should cut out a lot of middlemen. Yes, it's going to cost more to make those chips, but I believe right now with what people are paying for the chips and the profit margin on these microchips that everybody needs and everything, I think it's worth it for them to go ahead and build this plant and invest in here. And now all of a sudden Intel could give chips to American companies faster than any other company worldwide.
Mhm.
I think that for a long term, that's a good sign and a good buy in signal for an investment.
I don't think chips are cyclical anymore. This is almost for businesses, at least, this is almost becoming something that they absolutely will need every day, and they'll need more and more and more of on a constant basis.
Yep.
Especially as we head into the metaverse, gaming picks up as the supply chain issues for PlayStation 5 and stuff like that start to wither away, and they're able to actually get the chips for PlayStation 5 and the new Xbox. The sales of chips they're just going to continue to go higher.
And it's going to be like you said, this is part of our society. If you look around your house, just walk around and see how many chips you have in your house.
Mm-hmm.
Just in your phone alone, you probably got 2 or 3 different companies that have chips, just the chips in your phone. I'm not talking about all the other parts, and it's just a part of how we move as a society, as a global world. We need chips. We need it in every single thing we do. You get the big ones out there. Then you have other ones that are for more, that were always seen as more, the home computer group that was Intel, that was always seen that way. They've branched out from that. They don't just do that anymore, but that was still a big group, big portion of their portfolio for a while. I don't know. I'm looking for a deal in semiconductors. Intel's been beaten up. I think with the plant they're building in Ohio, once that gets up and running, they're going to have a foothold in the United States, and they're going to be able to sell chips faster to Ford, GM, all the car companies such as Tesla that are saying, hey, I can't get chips, and that's why I can't build cars as fast.
Yep.
I think that Intel's going to have a great salesman pitch. Hey, we could get you chips faster because we build it here in the United States. That's how I'm viewing it. That's how I'm looking at it. I don't know.
Yeah,
maybe you want to wait for more dips, a bigger drop in Intel before you dig in, but I think it's dropped a good amount already, and I think it's with this news as an investment long term, it's a good time to get in. I got back in the video. Remember how back in the day, I think it was beginning of December, I said I pulled out of my NVIDIA position. I kept very little in as a long term. I'm back in today. It had dropped so much. I was like, hey, I'm a buyer again. Backed in. And again, this is a long-term investment in NVIDIA. I'm going in NVIDIA. I'm going in Intel. I went in and out of Tesla already. And I'm maintaining my cooler position and adding more to it on its weakness recently. So those are my 3 long-term positions right now. Here's one that I was thinking about a long-term position, but I was concerned about its future growth. Is the next one I'm about to talk about. And you and I have personally talked about this off the podcast. And so I kind of know where you feel about this, but it's Netflix. All right.
Yeah.
So Netflix came out and they were dropping, right? They were worried about their guidance going forward and how they were going to compete in the market, and they're not going to add as many subscribers as they thought they were going to add, and so people started selling off Netflix. Well, Bill Ackman of Persian Square announced today that they started buying Netflix on Friday.
He's good. He's a good investor for sure.
Right. Well, now he owns 3.1 million shares they've bought since Friday to today. So in less than a week, they bought up 3.1 million shares. They are now in the top 20 of stockholders of Netflix shares overall. In just 1 week, they had 0 before Friday. Now, it has gone down every single day since Friday when Bill Ackman started buying, right? So would you say he's done a bad job or he called this one wrong? No, this is what we talked about on Saturday, when you can't always call the bottom, right? You know, his stock is now dropped. It's a good value stock. You want to say, hey, this is a good time to get in. Even Bill Ackman can't call the bottom, people. Like it's impossible to call the bottom of these. So if you're buying for a long-term investment, do what Bill Ackman is doing. Is you're buying at different times, right? It's gone down every single day. So every day he's lowered his cost basis. Every day he's bought a few more shares as it's dipped down, because he knows eventually this is going to start going back up and he's going to make a lot more money.
And that's what Charlie Munger's done with Alibaba as well.
Is he still buying Alibaba, by the way? Sidetrack.
It's the largest position in the Daily Journal's portfolio right now, that's crazy to me. I'm in the situation right now. You know, a year ago, I mentioned on this podcast that I didn't really care about spreading out your portfolio and diversifying. I didn't care about it back because you didn't need to. You just bought what was working and you were good last year. But with the kind of market volatility we're seeing right now, the kind of unpredictable market nature that we're in, I think we're going to see 4 rate hikes. JP Morgan thinks it's going to be 3. So we'll see. But I think it'll be 4. And I think we're going to continue to see crazy volatility probably throughout the year in ways that we haven't seen in a few years at least. And so right now I'm actually diversified. So if I was going to add more to Alibaba, then I would have to add more to like Berkshire Hathaway or something like that. And I'm not prepared to do that yet. But it was really surprising for me to see that, yeah, he's made that the largest position in the Daily Journal's portfolio. Because they seem to just be considered concerned about buying value. But at the moment, I'm also concerned about controlling volatility in my portfolio as well. So
I don't look too much for controlling volatility. I got my long-term investments. You know, I mentioned them here. It's NVIDIA. You know, it's Intel. It's Cooler. Those are my 3 long-term positions I'm in that I expect returns way down the road. But then I have things like I did with Tesla where I'm in and out. I want to roll that volatility. I want to catch it when the wave's going down and as it comes back up.
Yeah.
You know, and that's what I'm looking to catch my ride on.
I added some JP Morgan today because I think the market's underreacting to what the raise in interest rates could do for financials. I think JP Morgan actually is they are setting the bar too low for themselves, which is fine. I don't mind when companies kind of set the bar kind of low and then they beat it out of the park. Apple seems to do that quite a lot for themselves a lot. But they said that they're going to add only about $2.5 billion in net interest income because of the interest rates going higher. I think they're going to beat that. I think they're probably going to see about $4 billion in net interest income in the next year, because here's 3 rate hikes. I think it'll be 4. And I think they're going to have to do at least 4 to control inflation. With that being said, one of the issues is you've got, I'm sorry, I'll stop here in a second, but we've got so much debt built up in the United States and it's not just past debt. We're running on debt every day and we're running the debt higher and higher and higher. And if you raise the interest rates on the debt, then you're going to make that cost go up. And a lot of people are really concerned right now that could cause a debt crunch that leads to a recession in the United States. And I'm more worried about inflation leading to a recession, because inflation is much harder to battle once it gets into hyperinflation mode. We can have a recession because of a debt crisis and be out of it in 5 years. But hyperinflation really hit the stock market hard in the 1970s and the early 1980s. It's very hard to get out of that in even a decade. So I'm more concerned about the inflation. But go ahead, Dave.
So many things here to talk about based on what you just said. I want to wrap up Netflix. I'm not buying Netflix. I just wanted to push that out there for the story, for people to take it your own word. Think about it. Do what you want. Back to what you said.
You know what? I want to buy Netflix right now. I didn't buy it today. I actually really should have bought it today. And I'm kicking myself for not buying it today. And I'm kicking myself for not buying it Friday either. But you may have a rocky year with this one. But in the long term, this is going to pay off. Netflix is in a good position. It's in a saturated market right now, but it was first to market. And Reed Hastings is still a founder-led company. The guy's still incredibly passionate about what he does. And this was an overreaction to the downside for sure.
Gotcha. There you go. Brandon's calling a buy, but a rocky road. So watch out. All right. Back to what you were saying about the financial companies, interest rates. And people worried that higher interest rates means it'll be a harder time for the United States to pay off its debt. Here's the thing, though. If you don't raise interest rates and you don't get a hold of inflation, then you got to print more money. And if you're printing more money, the people who are buying our debt, i.e. other countries, are going to say, look, I'm not going to buy your debt if you're only going to give me a 2% return. I want to buy your debt. You got to give me a 10% return. We're going to have to pay those higher rates either one way or another. I would rather pay those higher rates and have very, very low to little to no inflation. Yeah. So, as an economic standpoint, from an economics standpoint and viewpoint, I would say the road we're going down is the better road to go down versus what we just have been through because of the trouble it can cause. And yes, back to your other side point about the debt and Americans are in debt. Yes. My concern with the Fed raising the rates is what's that going to do to the overnight discount window? And if a lot of people don't understand what an overnight discount window is, how it affects the economy, why this is important to financial firms, especially, and how rates affect it all. I mean, that's I could spend probably 15, 20 minutes talking about that, and how that you could just look at that and see how many times JP Morgan, Morgan Stanley, or Goldman Sachs is going to that window just to cover and have enough cash on hand for the 8 a.m. open the next day.
Well, JP Morgan has enough cash, I think, right now. Goldman.
Do they? So if I investigate this and next time we have a podcast, I show you that JP Morgan has gone to the window multiple times.
Challenge me on it. I'm sure.
I'm willing to bet they go to that window. All the banks do. Their money's so tied up, invested, and intertangled, and it's down a rabbit hole that they all have to in order to keep the cash on hand.
And to be honest, I bought some JP Morgan today. This is not, licensed financial advice, blah, blah, blah. But I bought some JP Morgan today. I dipped into it. I am in no way overweight on JP Morgan. I do have AIG, which I am overweight financials right now. But I'm not overweight JP Morgan by any stretch of the imagination, because I am watching the short-term interest rates and the long-term interest rates. And today, the past actually week, it looks like the long-term interest rates have not been rising at the rate that the short-term interest rates have. And that's because the Fed raising these rates right now and the supply chain issues and all that's making people fearful for recession. So they are making it so that they are requiring short-term yields to be larger, even though they're still small and bonds are still dead, but they're requiring those short-term yields to be larger because they're expecting a rocky road for the next 5 years. Which is why when people always look at they see the inverted yield curve and they say that tells me the recession's coming up. Because it's a symbol of fear. It's a symbol of short-term fear in the financial markets, because people are requiring short-term yields to be higher than the long-term yields. Does that make sense?
Yes.
So we don't have an inverted yield curve. We're quite honestly, we're not that close to being a flat yield curve either right now. We still have a steepening yield curve right now compared to prior years, but it is starting to flatten out a little bit. So I'm keeping a careful eye on that as I hold JP Morgan in my portfolio. But I really like Jamie Dimon too. That was another reason why I bought. I always buy companies because I like the CEOs.
I like Jamie Dimon as well. He's a straight shooter.
Yeah. And he always keeps a good relationship with whatever political party's in office, which I hate that has to happen, but it has to be a thing.
I mean, you could just be like Goldman Sachs and send half your employees to go work in the government.
Work at the Federal Reserve, yeah.
Yeah. I mean, the Treasury Department, how many people used to work at Goldman Sachs?
Yeah. And could raising interest rates, could it cause a recession? It is quite possible. The Federal Reserve is always having to walk this tightrope.
I don't know if it can cause a recession.
If they raise them too high, it can. Because the Federal Reserve is always trying to walk this tightrope of not being too low and not being too high. And in reality, what they're doing is they're trying to mimic what the free market would do with interest rates, which this is why, in my opinion, we should just let the free market actually dictate the interest rates and not have a Federal Reserve. But that's my tangent. I think we'd be better off in the long term. It would be really rocky for the first few years, but yeah. So that's my story. That's one of the reasons why I bought, but was kind of just dipping my toes into JP Morgan right now. It's had a nice pullback from its highs too. I think it was about 10% below its high for the year. So it's not too crazy right now.
All the financials are looking good and solid for this year. They have for the past few years. They've had a good run. They had last year was 2021. That's when there were the big comparisons year over year. We're looking for the big differences because you couldn't beat 2020s. But they actually did. They did very well, and 2022 looks to be doing very well for them as well. Because I believe, the big companies are the ones who started selling off Bitcoin, knowing the retail investors wouldn't be able to take those losses. So they panic and sell, and they push Bitcoin lower because of that. And then they come back in once it hits a certain level and they say, let's start buying back in. Then the retail investors start piling back in and Bitcoin goes right back up again. It's a good way for these big banks to make billions of dollars trading cryptocurrency because they could make it drop and move very quickly with their money.
Yeah. And on the same note of the Federal Reserve, somebody on CNBC the other day said that the recent market pullbacks may stop the Federal Reserve from raising rates the way that they want to. And I completely disagree with this. Now, back in 2016, I thought that might have been a possibility that the market was reacting to the interest rates prior to that, and the market was high. We didn't have inflation in 2016 the way that we have it right now, though.
Yep.
So if we didn't have inflation and we were only worried about asset prices in the stock market, then yes, I would say that could cause them to pull back a little bit and maybe only raise rates twice, maybe 3 times this year. But because we're worried about price inflation right now, they have to raise the rates. They have to. And you could say maybe that they can't do much about the supply constraints and stuff like that. And that's true, but they can still control prices through the amount of money that's out on the market and through interest rates on debt.
And what I really want to see from the Fed is what they're going to announce tomorrow, which is their balance sheet. How much are we holding of mortgages, and then how much are we holding of bonds? I want to know how much are we still buying and what are we planning to cut back in there? They said they're going to taper. Okay, well, how much are we tapering? We were spending $20 billion a month buying mortgages.
Yeah, it's over $200 billion just last year.
Yeah, so have we stopped doing that? Because if they stop buying those mortgages, these home builders aren't going to be able to pump out these houses like they want because these mortgages aren't being sold.
So
because the banks have to hold that. The banks have to hold that paper then.
Yeah,
and the banks won't hold it unless it's good.
they're going to have to slow it. There's no way they've stopped, because if they stopped, it would send a big shock through the market. That's just where we're at. I wish it wasn't happening at all, but they're going to have to slow the taper, but they're going to have to do it quick. Doesn't I just kind of contradicted myself there, but they're going to have to do it incrementally. Let's say that incrementally.
So we'll see the Fed balance sheet tomorrow. Let me pull up the calendar events, because there was a couple of things I wanted to hit on. You got the Fed balance sheet tomorrow. You got jobless claims tomorrow. You got your GDP number tomorrow. The GDP is another one I want to look at, see where we're headed, where we're at right now. Pending home sales coming out tomorrow. Those are all things looking at tomorrow. But the Fed balance sheet is the one I really want to watch. That comes out at 4:30. See how that one, what that says.
Yeah, this is going to be a tough year for stocks, but if you've got money on the side, if you've got money ready to deploy over the long term, you'll be just fine. What really sucks is for people who right now who are over invested, or even worse, if you're in margin right now, you're probably seeing your portfolio go absolutely insane.
If you're in margin because of the drop there, if you went and got margin because stocks were dropping in early January, I worry for how you handle your finances personally.
Yeah, for sure.
Because if you weren't, I was invested, my long-term investments all dropped.
Yeah.
I left a little bit in the video, and Cooler just dropped like a rock for me. It dropped down to where my cost basis was, where I first bought in, and I was up 75%. So, you got to be able to withstand these things in the economy. If it's a long-term investment, then it's a long-term investment. Let it ride.
If you're in a situation where you're over invested and we're at this point in the pullback, as long as you have good companies and you bought them for good reasons, you just have to strap on your seatbelt, unfortunately, and ride it out.
Yep.
And maybe add money to it, cost average down when you get the opportunity.
But don't borrow money to do it.
Right. Do not borrow money to do it. If you're really option players right now, and people in margin are getting slashed hard.
Oh yeah. A lot of retail option players got hit hard. You're going to see a lot of TikTokers, Instagrams all of a sudden not post for the next 2 months, and they're going to disappear because they lost all their money.
Or they're going to try to make it coming true.
And they're gonna try to make it back the same way they made it the first time, but 2020 is over with, guys.
Yeah,
that kind of ride is gone. We're back to more of a normal. Where Brandon and I had to grind it out for years, and this is what we did. And my goals are always the same, guys. 5% a week, 5% a week. I hit my 5% with Tesla. Just hit your 5% a week. You'll get there. Just base hits every single week. I do want to cover a couple things real quick. I know we're getting kind of here to the end of the show, Brandon. So I like talking about this next commodity. I know you hear me talk about it all the time. Let's talk about it one more time here, right? So the oil inventories, right? Oil inventories came out today. You knew I was going to oil, right?
Talk about it.
Oil inventories came out today, and we actually we had 2.4 million barrels more in inventory this week than we did last week. That was a good one for crude oil. Refineries actually produced more this. Actually, their capacity was down, but their barrels per day for gasoline was up. So we have more gasoline on hand this week than last week. We have almost 6 million more barrels of gasoline on hand this week than that last week. And we have 3 more rigs up and running in the United States this week than last week. And with all that inventory rise, oil still went up.
Because of inflation.
Yes, because of inflation. Yeah. ExxonMobil now is over $75 a share. It's who would have thought that? I don't know, man. We continue to add rigs. We continue to add everything. If rigs are going up, you think Apache would be back up to $40 a share by now, right?
Right.
That would be a good, safe bet. So would Transocean, RIG. That's another one I said, guys, look for these things to happen. If RIG would be a good one, if we start adding rigs and we start looking at it, it never went back down below 3 again for the buy-in point. So now I might have to raise my buy-in point because RIG is staying higher. Schlumberger, they do all the work on these rigs. I don't know if you guys, if you're not into oil companies like I am, but you like movies, go watch Deepwater Horizon. All right. All these companies I'm naming, are in that movie in some way, shape, or form. Not in a good light either, but you get to see what I'm talking about, kind of what these companies actually do. They go. Schlumberger doesn't actually own the rigs, but they go to the rigs, they work on them, they get them up and running, and they build them for the other companies, right? Apache is a company that owns the rigs and owns the oil. So or own a rig, give it to BP, and BP will lease that rig from Apache and pump out the oil. This is how the whole system works. They all work together. That's why they move as a group. And that's why I watch rig counts, because the rig counts continue to rise. Apache's a great one. Transocean's a great one. Schlumberger's a great one. They're all going to get a payoff from that. But the problem is the current political environment and getting permissions and permits. Yeah. And that's been a hatchet point. But with inflation, I believe there has been some pressure put on to go ahead and allow some of these to go through. And that's why we're seeing the rig count slowly rise week over week, week over week. Will we get back up to 1,600? Probably not, but we don't need to. We cut down imports already just with this little bit of rise we've been having. I believe we get back to around 800. We don't need to import oil because we are very productive now in how we use the wells we have. Our technology has advanced so much, we're able to pump out so much more.
Yeah, and it's not just people who invest in oil who should be watching this. If you own a retail stock in your portfolio, you need to be keeping an eye on it as well, because the transportation costs right now are eating up profits for a lot of retail companies. And so you better be hoping that those rig counts go up and they keep a control on the price of oil, because transportation costs are going up. And inflation will keep those transportation costs going up. And we've talked about this before. The first thing that goes higher when inflation kicks in is oil. So if we have more inflation, then oil is going to continue to rise unless they add more rigs.
Yep. And the next time Brandon and I get together, or maybe I'll do a break with David, because of all this and because of other geopolitical events that are happening around the world, I am looking at, I'm just going to tease you guys because I don't have all my research done yet, cargo containers and shipping oil via cargo container ships. There's companies out there that specialize in this, huge cargo containers filled with nothing but oil. I believe that now would be a good time to start looking at them. A lot of them have had a rise recently because of supply chain issues. Their stocks have gone up. I'm looking for one that the stock hasn't gone up worth more. It's that still out of value, and it has a lot of growth to happen. This is what I'm researching right now. I don't have any calls. I don't have any new news on it, nothing, but I will very shortly.
I'm a little concerned here. You were talking about geopolitical issues. I am a little concerned about the raising of the interest rates, and that might actually pull the purse strings back on the U.S. government for spending on certain things. But we've got a lot of geopolitical issues right now with Russia and China, and I still think I've been preaching Lockheed Martin for the past year. I still think it's a good buy.
I agree, Lockheed Martin. I've thought about adding that to a long-term investment right now. I haven't pulled the trigger yet, but I've looked at it.
It's a good way to hedge your positions against those geopolitical issues, especially if you own something like Taiwan's semiconductor company. I think if you own that, you have to own something like Raytheon and Lockheed Martin as a hedge against it.
Yep.
So.
Yep. All right. Final thoughts. I'll give mine first. Give you the last word, Brandon. What I looked at, I did my day trade in Tesla. I'm out of it. Do I still believe it could go up even more in the next week or so? Maybe, maybe not. It all depends on the news surrounding the markets right now. I did buy back into NVIDIA, even though I kept a small portion. I bought back in though today. So I do own NVIDIA again as a long-term investment. And I did go ahead and buy some Intel. So that's another long-term investment. Those are the two new adds to my long-term investment portfolios. I've been eyeing Netflix. I'm not going to pull a trigger. I'm not ready to pull a trigger. Brandon's kind of saying yes, but it has a rocky road. I'm not ready to pull a trigger on it quite just yet. I am looking at cargo container ships because there's a supply chain issue still going on. And I believe oil is going to be moved via cargo container ships because of certain pipeline issues. And that's my thought on that. Brandon, your final thought.
Now I just have to get back to training for my surprise Royal Rumble entrance on Saturday night under the name that everybody knows me as, which is Captain Awesome.
Captain Awesome, right? All right. Well, there you go, man. That's our final thoughts, guys. As always, we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.